Hello, everyone. Welcome to Next Level Humanity podcast. I have Anthony Del Porto here. Hi, Anthony. Welcome.
Hi, Nevşah, how are you?
Great. Thank you. Anthony is an investor, and today we're going to be speaking about capital, conviction, and the long game, seeing clearly, seeing the future clearly. Of course, we're going to talk about a lot about patience because that's what we need, I think, these days as investors. Welcome, welcome. So, should we start by your journey? For many people, investing is a professional, and for only a few, it becomes the way of thinking. When did capital start shaping how you see the world? And when did it start to be investing to be a way of thinking? Because I can very much connect with that myself. I believe there is an investor's mind. It's kind of like a shift in our thinking, which gets reflected into our daily life, relationships, everything as well. So when did that shift happen for you?
Absolutely. So, it's funny. I come at this from a different angle from most people in the investment world. I was a mechanical engineer, actually. So I used to do, drawings and build machines and all this sort of stuff. But, investing really has sort of always been, to me, the the way that you sort of find a certain amount of personal freedom. Engineering is a great profession. I loved it, but you're you're paid for your time, right? And time's just such a valuable commodity to the person who's giving it up. So I wanted to find a way that I was exiting that sort of transactional approach to time, and then so I started investing basically as soon as I could. I mean, I was doing stocks in college and all this sort of stuff, but things got more serious as I became later in my professional career. And then, the big mindset shift for me that led to putting together Better Way, the venture capital fund that I run, is the just the idea that investing in capital can also be a way to change the world and the way that the world itself works, right? So it changed from being sort of I'm a passenger in the car to seeing it as a way to decide where the car is going.
A beautiful way to put it. It's kind of like it's kind of like being empowered in multiple dimensions. I think managing money and managing wealth is very empowering in multiple dimensions. So, what early experiences taught you that markets are as much about human behavior as they are about numbers? Because
Oh gosh. Well, so all right, so my the impact that I wanted to have was in the environment. And so even at a young age, I would go and I would buy the earth friendly sponge, and it would be, just for washing dishes, and it would be a terrible sponge. And it would be, it wouldn't work very well, it would fall apart. And so I what I quickly learned was that for the most part, people doing what they do, they're affected by the world around them and sort of the technologies that are available. And the reason most people use products that aren't as earth friendly are that those are the ones that work and do the job. So then I started thinking, okay, how can we change those rules? And that's where, investing early stage, finding companies that are bringing new technologies that can change the rules being really sort of what the technology is, so that now all of a sudden, and not that we're doing sponges, but the for the sake of the metaphor, the eco-friendly sponge can actually now be the much better sponge than the one you had prior. And so seeing investing is the way to get that to happen, right? Early
yeah,
stage
yeah.
companies, they need capital, they need support. And so bringing that to them really becomes the way to enact that change.
Yeah, it is exciting and it's also very valuable. It's also like you experience being a true value yourself when you support pre-seed seed companies, which I also think is very rewarding.
Oh,
Was there
absolutely.
a moment when investing stopped feeling exciting ever, and started feeling a bit serious, a bit heavy, maybe? Because investing in your own funds is very different than
Yes.
investing in other people's funds. It gets more serious, it's a different dynamic.
Yes. I mean, bringing other people into the investments is where it definitely, it's still fun. The fun did not go away, but it's heavier. You can't, I mean, depends on the investor, but you can't as easily look at someone and say, well, we were doing what we intended to do and it didn't go well. It's just a different world. Once it's other people's money, you have to be far more serious, far more rigorous, and be able to really show that if something didn't go well, there was a good reason for it, and it wasn't something that you just sort of didn't try hard enough.
Yeah, and also not being charged if things doesn't go the way the way you thought they would, because it's kind of like I think we're doing our best, hardworking individuals, and yeah, I think facing that as well is a big thing. It's the other
Mm-hmm.
day we were speaking with a friend of mine here in London who is leading a hedge fund, and we were talking about with her, and she's been in the finance world for over 22 years or something, and we were speaking about the big responsibility and how tough it is to be face to face with the owners of the fund when things go wrong. It needs a different level of self mastery. We were speaking about that. It's like it's a different level of self mastery. It's a different level of, it needs a different level of self confidence and, you know, commitment to yourself and, the work you're doing.
Absolutely.
Yeah, yeah. And before capital entered the picture, what values were already forming your sense of judgment in the business world?
Oh gosh, I mean, really, truly, the even before I was on the capital side, it was I always had to feel that what I was doing was improving things, right? And in a some people will say that we're making the world a better place by doing something, and then they'll say whatever the something is that they say is usually just sort of like it's just doing business, right? And that's nothing wrong with that, but you really want to see that you're having an impact. I used to work for a company that did financial wellness at one point in my journey where we were teaching people how to deal with their day-to-day finances, which was much more of a mission related to investing as well, actually. But this was much more, this wasn't sort of, someone has a retirement account and you're trying to, grow it. This was helping people with, several maxed out credit cards. How do they deal with that, right? And it's a real reality for a lot of people. So it felt good to be working on that. And so just again, you spend a lot of your time working in any given day. And so you really want to feel that that time is going somewhere that you really have aligned it with your values and you feel like you're making the kind of positive impact you want to make.
Yeah, I fully agree. Doing what we love and loving what we do, and also being aligned with our own values is yeah, what matters at the end of the day. After years of investing, what do you trust most today when making decisions? Is there a maybe a pattern recognition? Is it intuitive? Are there some data you are definitely looking at? And it's like as an early stage investor myself, it is really tough to make those decisions because you never know. It's too early to make any assumptions. So how do you go through that?
Yep. There are some parts which you're constantly learning here, right? I mean, the parts of the pattern that I see that really make sense are you need to make sure, because these are venture style investments, that your market that's targeted is large enough that you can actually get the type of return you're looking for, right? But that's sort of like the standard, that's like due diligence 101 level type stuff. The real thing that I find is you need to see when you're talking with the founders and the entrepreneurs, and are these people that seem to, for some reason, just be able to attract more high level and performing people to them. And we're investing largely in hard technologies, right? So these are people coming out of laboratories, universities, or sometimes straight out of the industry. And so even there, you'll notice that when that person talks, other people are paying attention. They want to join the team. They're excited about it. So it's really seeing that the mission's big enough that the thing they're doing affects enough people. And then you really want to see someone that just can attract more people to them to all row in the same direction. It's that I would say those are the two big things that really have to be true all the time.
Yeah, great strategy. What distinguishes investors who endure from those who burn out and disappear? What do you think?
Oh gosh. I mean, I really do think it's mission, right? I mean, the if you're just there to make a quick buck, and the tide changes and or the market
And it's
changes,
never quick.
and it's never. Yep, it's not going to be quick anyways, so you can set that
Yeah,
aside.
even in the stock market, it's like it needs a lot of effort and it's never quick.
Yep, exactly. And but then, when all of a sudden things are going poorly and you're looking around, you just decide that some other strategy makes more sense. I'm done with this. I'm just going to leave. This isn't where you're going to make money quickly, and you go and you leave. Those are the people. They're chasing a thing that I think that doesn't exist. The people that are saying, no, I'm doing this because I really truly believe in it, and it's important. Those are the people that stick around, and that's what's been fun, really, with investing in sort of this climate and sustainability crowd, is that everyone's there because they're trying to, improve the planet that they live on. And to date, you really don't have any other options on planets. So, there's no giving up, there's no quitting, there's no getting out. We're still here on Earth.
Yeah, and the investors as well as founders, you're investing because you truly care.
Mm-hmm.
And I think what you say is true. I have seen the same, same pattern over and over again over the years. I think the ones who stick to their own strategy, their own values, and able to say no to what is not aligned with their thesis are
Mm-hmm.
the ones who eventually make it happen. I fully agree. A personal question: how has your relationship with uncertainty evolved? You know, during the years, and what did it cost you to develop this tolerance?
It's fun. I'm laughing because several times my wife will look at me and say, your risk tolerance is real different from mine.
I'm going to just add something. This is not the first time I'm hearing this, which is wives telling their husbands your risk tolerance is higher, and that's kind of like as a woman with behavioral health sciences background, I'm now certain that men have higher risk tolerance. We're in the material world, we're usually the ones who are freaking out, and you're like, yeah, why not? Go for it.
Do you have an answer on why?
No, I haven't yet. That's why I'm asking you.
That's fair. So, look, I mean, uncertainty is the name of the game, right? I mean, when people say they're going to do things or invest from a place of certainty, what they're really saying is, I'm going to assume that X, Y, and Z are a guarantee. But X, Y, and Z are never guarantees. I mean, I'm a big fan of Nassim Taleb, who did, The Black Swan, but he's also done several other books. I think the most recent one being Anti-Fragile. But his whole point is, look, over a long enough time period, everything breaks and falls apart. So the only thing that works is the ability to adapt to that. And this is what his book Anti-Fragile is about. That the systems that work are the systems that actually get more effective when there's uncertainty because they learn and adapt to it. And so my comfort with with uncertainty is really just the fact that even when you think it's a guarantee, it's not. And so once you accept that, then you can say, okay, now we're just trading relative amounts of uncertainty for relative amounts of benefit. And I can at least be certain because at no point is uncertainty zero. So just, got to let go of that.
Yeah, yeah, and I also like what you say, the rule of the game. Yesterday, I was a speaker at an event with around 20 women who were leading family offices, and one of the other speaker was Donatella, a dear friend of mine. She has over 3 decades of experience in leading family offices,
Oh, wow.
and we were like speaking before the event, and she was like, there are all these founders and investors. I feel this way, I feel that way. But it's like, she was like, I'm here to say it comes back to, it's at the end of the day, it's all about knowing the rules of the game. It's
Mm.
not about feelings. That's like simple as that. In the business world, investment world, know the rules of the game. And then you can grow with that. It's like it comes back to the rules of the game because there are rules of the game. There is a system, a structured way of, you know, the game we are planning and playing, and it has certain rules, specific structures, and when you follow those, you get to somewhere. But if you're like above the clouds and I feel this way, it doesn't work. We were speaking about the young generation and all that. That was one of the topics. What's the most subtle mistake you have ever done yourself and experienced other investors still making?
Oh my, most subtle mistake. Man. Well, I mean, the real answer is probably I don't even know yet. But I think, maybe it's not. Maybe can I reframe it as insidious mistake? So I think the most insidious mistake a lot of investors make is investing in something because someone else is in it. So there's the simple your version of that, which is just, you know, you're giving up part of the conscious level of thought of really analyzing an investment and deciding that yes, this actually does work for how I view the world and what I think is coming, to just saying, well, somebody else thinks it's so good enough. But that was what was the blood testing startup that blew up. Name I can't remember right now. This is perfect timing.
Yeah, blew up big. We
Yeah,
we know what we're talking about, so
but that basically everyone kind of looked at each other and said, well, I invested because you did. And they said, then that person said, well, I invested because that person did. And that person said, that's because you did. And nobody was actually doing the analysis. They just invested based on the fact that there were big names in it, therefore it must be good, which, that's sort of the worst version of that. But that's why I say it's insidious, because if someone that you trust invests and you invest because of that, and then somebody else that trusts you invests because you invested, and it's not wrong if it turns out it is a good investment. But if everybody's sort of given up their own level of critical thinking as a result, then all of a sudden you have big issues.
true. And that puts a lot of responsibility on lead VCs, lead investors' shoulders. Because if you're the lead investor and then the rest who's coming, they're like, we thought you know your thing because you're the leading investor. That actually happens more on the LP world. I see more and more LPs, investing because the other LPs invested,
Mm-hmm.
So I think
Mm-hmm.
that's happening more on the LP level, but on the VC level, yeah, I agree. To do your own work, do your own research. Yeah, I
Absolutely.
agree. Yeah. Capital, I think that's like why, in general, why VCs decide to be VCs, because shaping industries, culture, also, having some kind of an effect, some kind of an impact on the world is what matters at the end of the day. That's why, an LP becomes an LP, a VC becomes an VC, or an investor invests in startups, and capital is quietly shaping everything, industries, culture. How conscious are you of the second and third order effects of your decisions?
Almost the nature of why I decided to do this is the second and third order effects. That was really what I was hoping for. So extremely conscious. Third order gets a lot harder, right? You've got weird, things like Jevons paradox, whereas things get cheaper, people use more of it. So there's a I don't know. It's kind of like you're standing in a street light at night, and I can see as far as that light shines, and beyond that I can kind of glimpse a little bit, but after that, I can't tell anything that's going on. So I can only operate with the amount of information I have that I can actually determine what the future will look like as a result at the second and third order of what we're doing. So there's also a certain amount of accepting that beyond that there's no way of knowing, so you have to sort of hold your breath and cross your fingers.
Yeah. And support the founders in any way we
Oh,
can.
100%.
Yeah. Over time, what kinds of founders, ideas, or structures have you felt most compelled to support, even when they weren't obvious, they weren't the best bets and they weren't obvious, but I believe every VC, at least I have met until now, is compelled towards certain ideas and certain founders and structures. So what is it for you?
The thing that I'm looking for to just as clarification, so we're investing in hard technologies. Like I said, this is usually coming out of research institutions, sometimes people out of industry, but these are more technical founders. And what I actually really like especially as an early stage founder, is finding those people that are coming from that technical background, because I share that with them, that are now making their foray into the business world. And what I really like to see are people that have that sort of spark of curiosity. They want to understand how the business side works, and they want to understand what they need to learn in order to succeed there. So these are people that they're smart, they're technical, they haven't gone through a lot of these, they haven't been through the meat grinder yet of running a business, and that's okay, because they have that you know desire to learn how this is going to work, and they recognize that we're not going to get it right the first time. Hopefully we get it right, the second, third, fourth, fifth time, but that they have the drive to really get that. And that's what I want to see. Because these aren't usually people coming out with an MBA. These are people that have a chemistry degree. It's just a different skill set, but they can get there. They just need a little help and guidance.
Yeah, yeah. Now the next question will be a bit philosophical, maybe. How do you personally define enough when it comes to wealth, ambition, legacy? When do you say, okay, enough?
That's fun. So the wealth side, enough is pretty easy. I'm not concerned. I'm actually out. You can look him up later. There's a guy called Mr. Money Mustache who is much more about not spending money so that you can actually live a life of freedom doing what you want. And by the way, that also helps the environment, because you're not just buying things just to buy things or anything along those lines. So really the question really then becomes much more on the legacy and the impact. And like I said, I don't know that there isn't enough, because we're in a bad spot as far as how things are going with the environment. And so I don't see us getting somewhere good in my lifetime, maybe in my children's lifetime, but we've got a lot of work to do, and I'm okay with that. I enjoy the work. I enjoy doing this. It's fulfilling to see things improve. So I'm not really looking for enough, and I don't worry about getting there anyways.
Yeah, that's a great answer. Thank you. That's very wise of you to say those things. What do you think the long-term investors, what responsibility do long-term investors carry that short-term participants usually overlook?
As a short-term investor, and I'm early stage, I'm not short term, but the key thing is to see that the company and the people in it can grow and become the person that you need at a later stage. And not everybody can, and that's fine too. I was listening to a great speech last night by a very successful founder who just recognized that he was an early stage guy. And once he got into big companies that were going to IPO, he needed to get out. And that change and that development over time is something that either you can help someone develop to where they can do it, or help them see that they're actually going to be happier if they step out, because they don't really like the things you need to do when it becomes quarterly reports to shareholders on the public markets. It's just a different
Yes.
game.
Yeah. Yeah, and most founders don't like that.
Mhm.
I think most founders, like the whole, starting up and, small teams and building something. And then when it gets to a point, IPO, most founders, at least I know of, decide, I don't want this. So yeah.
And even as an
And that's
investor,
understandable.
yeah, yeah. Well, even
Because
as
if
an
I
investor,
wanted that, I would go and work for
yeah,
enterprise, C-level.
exactly. Sign up for that job. That's an easy one to find.
Yeah, yeah, exactly.
And even investing, I recognize that my role is going to change with my startups. When it's pre-seed and seed, I'm very involved. When they're contemplating which iBanker to take them through an IPO, I really can't help and don't really get much out of doing it anyways.
Yeah, yeah. That's I think the fun part. We can choose. We can pick and choose. Yeah. What beliefs about success, money, markets have you completely outgrown since you became a VC yourself?
Well, I will say to anyone that is an entrepreneur and working in startups, and they look at the VCs they're talking to and they think, wow, they have just this pile of money they can do whatever they want with. The reality is, as a VC, you're just constantly fundraising. That's what you're doing. And so it's a different world. And I would like to think that meant that VCs therefore had a much more sympathetic view of founders. And some do, but some don't. So I don't know. That's the big difference is what.
Yeah. Do you think, Anthony, do you think the VCs are kind of like a buffer mechanism or a filter between, you know, the investors who are investing their own money and between the startups?
Oh, 100%. Well, and it's
Yes.
and it's a I love the fact that you use the term buffer because I think it's also a buffer in like the computer science sense, right?
Yeah.
That investors, the people allocating funds move at a certain rate, but when they do, it's going to be big. Whereas startups are coming constantly and it's really fast, and these are smaller bets. And it's, you're acting as literally the buffer. I love that you said it that way. I think that's perfect.
I mean, it's how it feels for me as both an angel investor with some experience with angel investing and also, syndicate investing and also crowdfunding and, and also LP. So it's kind of like you are the buffer.
That's
Yeah. What does patience look like, both in the investment world for you and also in real life? Because I believe and I sincerely think when I look at investors, VCs, like I said in the first place when we started the conversation, uh, I think patience, being patient, understanding patience, and understanding how patience pays, long-term investing, letting the money earning money from your own money. So it's kind of like this whole different mindset which most people don't have. For you, what does patience look like in real life? Also in the investment world, but also in real life, not as a virtue, but as a daily discipline, as a daily choice, which I think all investors, or myself included, are making because it's kind of like a daily discipline. You're not after short-term gains and short-term pleasures, I would say,
right.
but you have enough discipline to just wait for the long run. And you have to remind yourself every day that you're here for the long run, not for short-term reward. So that's a, I think, different mindset.
Oh, 100%. Well, and if anyone wants to get into early stage investing, it's a good lesson in patience for sure. Because what's interesting is that most people get the headlines, right? They see the news version that or the press releases of these companies that have done these amazing things, and it's worth so much money, and and every now and again you'll hear, and the people that really did well were the early investors. And so it's easy to say to yourself, well then obviously I just need to be an early investor. But the missing part is what you're saying, which is the patience. Because keep in mind, those people did this a decade ago. And yes, there's an element of it's hard to keep showing up because you're not getting those rewards and those dopamine hits, really, of seeing it work. But at the same time, the thing here is that's the most fun, honestly, is to pitch in with the startups and help them find another customer or the next investor or whatever it is. That's that's I think Jerry Seinfeld said something to the effect of every job has a part that's, he says, no fun, I guess we'll say. And he said, you just have to find the one that type of no fun works for you. And so, there's an element of patience and being zen about things, but then there's also an element of finding something that actually doesn't feel that bad in the process. And so I enjoy the helping part that I get to do on a daily basis.
Yeah. When you step out of, out from markets and decisions and startups, who are you without the identity of an investor?
Oh gosh. I mean, father, I play music, sailing, I don't know. I enjoy life. It's there's so much to do and enjoy here. And I would say, my big thing is community. We are fortunate to live in a neighborhood that feels like a neighborhood. We're in an older part of Charleston where, the school's right down the street. There are parks you can walk to, and I see people I know pretty much every day walking around. And that's, just being part of a community, just a human being that gets to really take part in sort of the natural, I don't know, beauty of the simple things in life.
Yeah, yeah, I think we humans are in the need of belonging, and we are very tribal, so that, community does matter, especially for, mental health, and as we probably most of us know, for mental health, emotional health. So yeah, that's beautiful. So you're a in your own community, and you're a tribal investor. Yeah, that's great. And over the years of, when we look back to your experience in business, and then now as an investor, what truth has remained constant for you moving through all business cycles, maybe a couple of crises, changing narratives? What's the truth that remained with you over the years?
I'd say it's the first time is always the hardest. That's sort of what I've noticed. I mean, the first time you have to let someone go that's an employee, that the night before is, you know, never ending if you can sleep at all. Then after that, you're like, okay, we've done it, we've survived, and now I know what it really is versus what it isn't. But there's the other side of that too, right? Which is startups. If you're doing this right, everyone talks about you're going from 0 to 1. So this is the first time anyone's done this in the world for whatever you're doing. And so, there's that element of it's going to be really hard, but every inch of progress you make is going to be, the hardest time it was for you. The next time you make that inch, it'll be easier by a large margin.
Yeah, it is very much because I am also a startup founder. It's kind of like giving birth. And then the child grow up, and then I think along the way you learn a lot about yourself. Even you know the fact that maybe like me, that you're not a startup founder. Like my journey has been, whoa, this is just too much. Maybe I'm not a startup founder. So in the journey we sometimes learn, this is not for me. I'm too chill to be a startup founder. That's now I like mentoring, especially the young generation, and that's like what I'm looking for, because there is a difference between startup founder and a founder. Like I'm a founder, I'm a serial entrepreneur, but being a startup founder is a whole
Mm,
different journey, which I didn't know many years back then, like 10, maybe 12 years ago when I first founded my own startup, but it didn't turn out to be a startup. It's still on App Store and in the markets and all that, but it's like, no exit strategy, nothing. And I learned about myself that, I'm just too chill, and I don't have that ambition about, money, first of all, or maybe I should also put it like that, thirst for more, because you have to, when you look at founders, they have this third, they're hungry for more. And then at one point I was like, I'm not that hungry, so I'm just sorry, it's not gonna happen.
which is right.
That's also like what we should be, I think, looking for as investors.
Mm-hmm. Oh,
That
100%.
thirst and hunger, and that, yeah, it was a lovely conversation, Anthony, and a lot of things, a lot of insights for me happening, and deep conversation. Thank you very much. I'm
I really
certain,
enjoyed being here.
yeah, everyone listening enjoyed it as much as I did. And I have one last question, which I usually ask to all of our guests. If you could leave one message to the next generation of investors and founders, what would that be?
You know, this is your chance to change the world, I think is really the answer. And so just I hope you feel really good about the change that you're making.
Yeah, and go for it, maybe. Yeah. Yeah, lovely. Lovely. Thank you. Thanks to all of our listeners and whoever is watching us on YouTube. Make sure you subscribe to our channel, also on Spotify, and I will see you in the next episode. Bye for now.